Welcome back to Finance Buzz Friday. We're diving deep today into some big changes coming to the UK financial services industry. We got a lot of requests to break down the Financial Conduct Authority's, updated financial crime guide.
Yeah, the FCG.
Right, the FCG.
Yeah.
So we're focusing on the key areas that are going to really shake things up. Sanctions, proliferation financing,
Right.
transaction monitoring, crypto assets, and how all this ties into the consumer duty.
It's a lot to unpack. What's interesting is the FCA didn't just drop this on everyone,
Oh, yeah.
The guide came out in November 2024, but that was after months of a public consultation. They were getting feedback from the whole industry, which tells me they really wanted to get this right.
Yeah, that makes sense. So before we get into specifics, can you give us the overarching goal? What's the FCA hoping to achieve with all these updates?
They're really trying to strengthen financial crime prevention across the board. The goal is to reduce harm to consumers and protect the UK markets. The guide pushes for a more proactive approach, leveraging technology, but they're also stressing responsible implementation.
It seems like, and maybe I'm reading too much into this, but the Russia-Ukraine conflict had a big impact on the sanctions section.
Absolutely.
Am I right? What are the big takeaways for UK firms on that front?
Yeah. One major change is the emphasis on senior management accountability for sanctions risk. It's not just about having a policy, it's about truly understanding the risks and taking proactive steps to manage them.
So no more looking the other way.
Exactly. Leaders need to be hands-on. They need to be aware of the evolving sanctions landscape, which can change really quickly. And firms have to be able to adapt fast and have systems to spot potential breaches. The guide is very clear about needing robust reporting, too.
Right, because even if you catch it, hiding it isn't an option anymore.
No. There are some real horror stories out there. The guide even tells a story about a firm that didn't report a sanctions breach, not because they were trying to hide it, but because they didn't even realize it had happened.
Oh, wow.
Their controls were that weak. The FCA is serious about this.
Okay, yeah. That's a big red flag for sure. Now, you mentioned proliferation financing earlier. I got to admit, I'm not as familiar with that term. Can you break it down for us?
Sure. Proliferation financing is about funding activities related to weapons of mass destruction. So think like developing nuclear weapons or chemical weapons, that kind of thing.
Okay. So what does that mean practically for firms in the UK?
It's a big shift. It's now explicitly part of the FCG. Firms are required to do proliferation financing risk assessments as part of their overall financial crime risk assessments.
Got it. So the FCA is really pushing firms to get tech savvy, especially for transaction monitoring. They talk about using AI a lot in the guide. How do you see that playing out in the real world?
I think AI and machine learning are going to revolutionize transaction monitoring. These tools can analyze massive amounts of data and catch suspicious activity that humans might miss.
That sounds great, but...
But there's always a but, right?
Exactly.
You can't just throw AI at the problem and walk away. The FCA is very clear about the need for strong governance and oversight. You need to be able to understand how the AI is making its decisions.
So responsible implementation is key.
Absolutely. The guide gives some examples. Like, you need to keep detailed records of how your AI is trained and what adjustments are made. That way it's not just a black box.
Makes sense. One thing that caught my eye in the guide was how they now specifically address crypto asset businesses. Seems like a sign of the times.
Definitely. The crypto sector has grown so much, and the FCA is recognizing that. Now crypto businesses fall under the FCG, just like other financial institutions, with the same AML, CTF, and PF expectations.
But crypto's so different. Does the FCA acknowledge those unique risks?
Yeah, they do. The guide recognizes that different crypto assets have different risks. They mention privacy coins, for instance, which are all about anonymity.
I bet those are giving regulators a headache.
For sure. The FCA is really emphasizing that firms need to have systems in place to handle those risks, especially with assets designed to hide identities.
Sounds like we'll be seeing a lot more scrutiny of transactions using privacy coins then.
I'd say that's a pretty safe bet. They're sending a very clear signal. If you're dealing with crypto, be extra vigilant, especially when it comes to those assets that try to obscure who's involved.
Okay, so another thing that stood out to me is how much the FCG emphasizes aligning financial crime controls with the consumer duty. Can you unpack that a little? How will that change how firms interact with their customers?
Right. So the consumer duty is all about putting the customer first. Firms have to act in the best interests of their retail customers and avoid causing any foreseeable harm. This applies to how firms deal with financial crime as well. It's not just a separate thing. It's about thinking about the customer experience in every part of the process, being fair, transparent.
Can you give me like a real-world example of what that would look like?
Say a customer is a victim of fraud.
Hmm.
The firm needs to handle that with sensitivity, provide clear communication, support,
Right.
make sure the customer feels heard and protected. And all of that has to be done in line with the principles of the consumer duty.
So it's like acknowledging the human impact and responding accordingly.
Exactly.
So besides all that, anything else notable in the FCG that we should touch on?
Yeah, a couple things. There's more focus on data security with updated examples of what they consider good practice and what they don't.
Okay.
And they're really encouraging firms to share information more to fight financial crime, which is something that's also in the Economic Crime and Corporate Transparency Act from 2023.
Right. Well, this has been super helpful to get it all laid out.
Glad to be of help. It's a fascinating topic.
Yeah. So as we move to the next part of our deep dive,
Yeah.
I think it's worth pausing for a moment and letting all this sink in for our listeners. The FCA is really raising the bar here. They're pushing for a more proactive, tech-driven approach to financial crime prevention. But it's got to be done right, with a focus on what's best for the customer and using AI responsibly.
The landscape is definitely shifting. Firms need to adapt, evolve. The stakes are high, but the rewards of getting this right are high, too. It's a bit of a cat and mouse game, isn't it? The criminals are always finding new loopholes, and the FCA is trying to stay one step ahead.
Right. It does feel different this time, though.
Yeah.
They're drawing a line with these updates.
Yeah.
They're saying a reactive approach just won't cut it anymore. Firms have to be proactive, use the latest tech and strategies to stay ahead.
Absolutely. Technology is a powerful tool, but it's not a magic solution. The guide emphasizes the need for skilled people, who can understand the data, assess risks, and make good judgments. Human expertise is still crucial.
So I'm curious, how's the industry reacting to all of this?
It's a bit of a mixed bag, honestly. Some firms see this as an opportunity to improve their systems, and gain an edge. Others are a bit more hesitant, maybe worried about the cost and the complexity of it all.
Understandably, it is a lot to take in, especially for smaller firms with fewer resources.
Yeah, but the FCA is pretty clear. These changes are non-negotiable. Firms that try to take shortcuts or delay things, they'll be under scrutiny and could face serious consequences.
The risks are too high to ignore.
Exactly.
So what would you say to those firms that are feeling overwhelmed?
Don't panic. That's the first thing. Just take a breath and start by reviewing the guide.
Right.
Focus on the parts that are most relevant to your business.
Okay.
Come up with a clear plan to address each of the requirements. Break it down into smaller steps.
That's a good approach.
Yeah.
And I imagine there's help out there to guide firms through this.
Oh, absolutely. Don't be afraid to look for outside help if you need it. There are consultants and service providers that specialize in this kind of thing.
You mentioned consultants. Do you think we'll see a surge in demand for financial crime compliance expertise because of these updates?
Yeah, I think it's pretty much inevitable. Firms are going to need specialists who can help them implement these changes.
Right.
It could create some really interesting opportunities for people already in compliance or for people looking to get into that field.
Interesting. So let's bring it back to our listener. What are the key takeaways for them, especially those working in UK financial services?
It boils down to this: the regulatory landscape is changing fast. The FCA is raising the bar, and firms need to adapt quickly to keep up. This means investing in technology, upskilling their staff, and really creating a culture of compliance from top to bottom.
It's not just about avoiding penalties, is it? It's about protecting consumers and making sure the whole financial system is strong and trustworthy.
Financial crime has a real impact on people, businesses, and society as a whole. It's everyone's responsibility to try to prevent it.
As we're talking, it strikes me that these updates aren't just about tightening the rules. It's about building a financial system that's more resilient and trustworthy.
Yeah, I agree completely. By strengthening their financial crime prevention frameworks, firms can show they're committed to doing the right thing, and protect their reputations and build better relationships with their customers.
It sounds like the FCA is trying to find the right balance between encouraging innovation and ensuring responsible behavior.
Definitely.
They want firms to use new technologies, but also to use them ethically and in a way that benefits consumers.
It's a delicate balance, for sure. Finding that sweet spot is the real challenge.
We've talked about a lot today, but this is such a complex topic. Is there anything else you think our listener should keep in mind?
The key is to stay informed, stay engaged, and stay proactive. This isn't a one-time thing. The FCA will probably keep updating its guidance as new challenges come up, so firms need to be ready to adapt.
That's great advice. What resources would you recommend for those who want to learn more?
The FCA website is a great place to start.
Okay.
They have tons of information there, including the full financial crime guide and other publications on specific topics.
Good reminder. So before we move on, I want to circle back to something we talked about earlier, the risks associated with different types of crypto assets, especially those that are designed for anonymity, like privacy coins. It's a bit of a minefield, isn't it?
Yeah, it is. Crypto assets are both exciting and challenging.
Right.
They have a lot of potential benefits, but because they're so anonymous, they can also be used for illegal activities.
So what specific risks should firms be most concerned about?
The biggest concern is that it's really difficult to trace transactions and figure out who's involved. That makes privacy coins especially attractive to criminals who are trying to launder money, finance terrorism, or evade sanctions.
So how can firms mitigate those risks when they're dealing with crypto assets?
It all comes down to strong KYC and AML procedures that are specifically designed for crypto assets. This means doing thorough due diligence on customers, carefully reviewing transactions for suspicious activity, and reporting any concerns to the authorities right away.
Sounds like a lot to consider.
It is, and it's changing all the time. Firms need to stay up to date on the latest developments and best practices to manage those risks effectively.
It's a good reminder that financial crime prevention is an ongoing process.
Absolutely. Constant vigilance, adaptation, and a commitment to continuous improvement are essential.
Well said. Reflecting on what we've discussed today, it seems like these updates to the Financial Crime Guide are really about creating a culture of responsibility within the financial services industry.
I think that's a great way to put it. It's about moving beyond just checking boxes and adopting a more comprehensive approach to financial crime prevention.
Yeah.
One that's based on ethical principles and a real dedication to protecting both consumers and the financial system as a whole.
It's about building a system that's both strong and fair, a system that works for everyone.
Exactly. That's a goal worth striving for.
Well, I think we've covered just about everything for today. Any final thoughts?
The fight against financial crime is a team effort. It's an ongoing battle that requires everyone to be vigilant and work together. We all have a role to play in protecting the financial system and making sure the future is safer and more transparent for everyone.
That's a powerful message to end on. Thanks again for joining us today and sharing your expertise. It's been a really insightful conversation.
It's been my pleasure. Thanks for having me.
And to our listeners, thanks for tuning in to Finance Buzz Friday. We hope you found this deep dive into the FCA's updated Financial Crime Guide valuable recuration. Remember, knowledge is power. Stay informed, stay vigilant, and stay ahead of the curve. Until next time, take care.